Welcome to Central New York Real Estate Realities with Mike. This channel provides a series of brief Central New York real estate topics. I'm Mike Liepke, Associate Broker with Howard Hanna. Welcome to Episode 5, Get Your Offer Accepted. It's always an exciting time when buyers get ready to put in a purchase offer. And during that process, from the time they would put one together until the time that the offer is submitted, I invariably get the question, do you think the seller will accept our offer? Well, the bad news is no, because, but I don't say that, because only 1 out of 21 offers actually gets accepted as submitted. But the good news is that it would be great if we got the seller to accept the offer. But what we're really after is to get the seller to come back and counter the offer and begin to negotiate with the buyer. So that's one key point. So basically, when I tell buyers, I said, you think our offer will be accepted? I usually say, not without negotiation. So, but then if we look at a timeline on where let's say the offer is accepted here, and the timeline is running this way, and you submit an offer, then negotiation runs in between. So that's outside the scope of this discussion. So we're going to look at the initial offer itself, which is really the important aspect. It's the last thing the buyer does before entering into a negotiation, and hopefully gets an accepted offer. But so the key point here is this initial offer. Now, in order to have an initial offer, the buyer has to have enough interest in the property. Do you like this property? Can you see yourself living here? Do you want to put in an offer? So the desire needs to be there, obviously. Next, the buyer needs to be able to submit an offer. So if you can't submit an offer unless you've got a pre-qualification or a pre-approval, or if you're fortunate enough to pay cash, then you'll need a proof of funds. So that whole process evolves around being ready to make an offer, actually have the desire to make the offer, and to put the offer together. Now we're going to look into the offer itself in more detail, and I'll discuss that. And usually what we talk about, there are a lot of variables that go into an offer. Buyers need to be aware of what those are, and we usually use the term of stronger or weaker. To begin with, I think you'll be surprised to understand or to hear that it's not always price that determines which offer gets accepted. And that brings up another point too. Most of my discussion will be assuming that you're the only offer. You don't have any competing offers. Multiple offer situations change things, and I'll interject something appropriate at the time for some of these variables when we discuss them. And I understand too that if you've ever put together one of those pieces of furniture in a box, I'm sure you've all struggled through that, as I have many times. We have to start off, we have to take inventory, we have to know where all the nuts and bolts and screws and nails and different panels are. We really don't care about those things other than they need to be there, we need to put together right, and what we're really looking for is that finished overall project, the piece of furniture that we saw in the showroom, and that's what we're seeking. Well, talking about a purchase offer, it's could be a little bit dry. But it's important. You need to be familiar with these different terms and variables and options that are in the purchase offer, so that you could put it all together properly and make the best decision on what you want in your offer. Now, when you put the offer together, submit it to the seller, it needs to be attractive enough for the seller to actually begin negotiation with you. So again, let's jump into the individual pieces of the purchase offer itself, and we'll discuss those, each one briefly. I'm going to break these up into 3 different groups. There's price, conditions, and terms. Sorry. And we're going to take price last, even though you're probably most interested in that. But we're going to talk about terms and conditions first. Now, conditions are really the conditions or conditional aspects are basically the contingencies that are in the purchase offer. And two of the major contingencies, then they don't always apply. But if you have a home to sell, we call that a recall contingency, that's going to be less attractive to a buyer. But based on your situation, if that's what you have, that's your situation, that's what you have to deal with, then that's what you have to deal with. So the important thing is, you'll have to identify that it's you have a house that needs to be sold before you can financially qualify to purchase this home, and your purchase offer is based on that assumption first. So there are some details involved in that, but basically, you never know. A seller may be willing to wait. Maybe their timetable is not really time dependent. And if you're the only offer, and if the home's been on the market for a long period of time, and you get a good reasonable price to the seller, there's a good chance that you could get that offer accepted. But the other thing too is if your home needs to be ready to go on the market. If it's not listed already, then it needs to be listed, before sometime after the home inspection contingency is satisfied. So there are risks and timing involved. I'm not going to go into all the details right now, but basically, a better offer in this particular situation would be one that doesn't have a home sale contingency involved with it. But if the contingency is required based on your situation, then you should show to the seller that you're ready to list that home where it's already listed. Until you get it under contract, you're at risk of losing the deal, because the seller can still market the home, and if he gets a better deal, then he recalls your offer, and if you can't financially afford it at that period of time, then they move on to the next buyer. The other contingency is home inspection. The home inspection contingency, I would never, as a realtor, recommend that anyone forego the home inspection contingency, but many deals have been lost because another time has come in and decided not to have a home inspection. So that takes a week, 10 days, 2 weeks out of the timeline of closing for a property. And from the seller's point of view, it can be very attractive, especially if the offer prices are fairly similar. But that's a decision that you would have to make. I would never recommend that someone forego the home inspection contingency, because here in New York State, our laws are based on the caveat of caveat emptor, which means let the buyer beware. There were other contingencies in there that are kind of baked in the cake, just to touch on them: the mortgage contingency, time, getting into some of the terms. Some of the terms are dates. If you are going to have a home inspection, then you want to do it as quickly as possible to get that done, because the seller is going to be on pins and needles to see that the home inspection is satisfied before they go on to the next phase, and then you do your mortgage commitment and so forth. The other one side of the terms is the closing date. Now, a lot of times this is just a makes sense, point of view. If you do get some, you don't always know, but if you do get some indication from the seller that they want a short closing, or they're willing to wait, or whatever the case may be, this is a situation where you can put something in there that might be better from the seller's point of view, as opposed to just going with the standard arrangement and just letting the chips fall where they may. So that's one thing that just makes sense. And the closing dates are on or about. So there's some variability in when you will actually close, but it's an indication of a date that everybody's shooting for. The other items under terms are your financing itself. So based on what kind of mortgage program you're going to have, or if you're going to pay cash. Of course, cash would be a stronger offer. Mortgage, in terms of a conventional loan, would be a stronger offer as opposed to FHA, VA, or USDA. But again, if your situation dictates, that's what you have to work with. That's what you need to work with. The other option too is, regardless of the loan product that you're using, the amount of down payment will make a big impact too. And again, there's a situation if you're using an FHA mortgage, you can only, this is your first time buyer, you can only manage the 3.5% down. That's not going to be as strong as someone that's coming in with an FHA with 10 or 20% down. So those are key things to consider. Another option is other term would be lender required repairs. We don't really discuss that much, and usually you put a value in there for a limit. If the lender comes back and says that you have to repair these things in the property before they'll actually loan on it, issue a mortgage on it, things like peeling paint, missing handrails, safety-related type of issues, or anything that might jeopardize the property as collateral for the mortgage that the bank is going to write, like water running across the basement floor, things like that. You can put a limit on that up to, let's say, $500. There are options on there to say that the seller and the buyer will split the costs, the seller will pay for all of them, the buyer will pay for reinspection costs. Those are all things that could be strategic and could make a better appeal to the seller. And the other item in terms of group of variables under terms is the appliances and or personal property. A lot of times this becomes a sticking point, and the less drama that we have involved with the contract, the better. The seller is going to present the list of appliances that they plan to leave with the property. If the buyer has exceptions to those or needs more or less, that could kind of irk a seller from time to time, especially if you get arguing over, you need the refrigerator or so on and so forth. So that's a common sense thing, but again, based on your situation. The other group of terms are price and financials, and obviously, a purchase, a sale price closest to the list price or the asking price that the seller has put out on the listing will be considered stronger to the seller than something that's less. And in terms of price, you need to work with the realtor on that and consider a number of different factors. Number one is what you're approved for, what you're comfortable with, what the list price is, and also what the actual market value of the home is, and in conjunction with that is where would the home appraise. Sometimes in a multiple offer situation people go over list price, but then there's always a concern that the home won't appraise at the end. Now there's some things we can do and put in some contingencies to protect you on that if you get in a situation where you're well above list price. And the other financial thing that goes in with price is the earnest money deposit. Now that's the amount of money that the buyer puts forth to show that they're in good faith, they're earnestly trying to purchase this property. The minimum nowadays is around $1,000, but you can go up as high as you want, put your old down payment in there. It'll be credited to you at closing. But it's the amount of money that you risk to lose if something goes wrong with the deal or you back out for a reason that's not valid in terms of the contract. So people usually kind of go in with the minimum. But to show that your motivation, your desire to purchase this home, a couple of extra $1,000 or $5,000 will make your offer stronger than someone that's just putting in $1,000. So that's one thing to consider too. Now, in terms of multiple offer situations, again, you'll have to work with your realtor on that, determine anything in and around price, and hopefully your realtor will do a buyer's CMA for you, and you'll get an idea of what the market price is for the home. You get a feel for what the appraised value is. If you're the only offer going in, you go in at a price that's reasonable market price. But consider too that sellers asking for this much. If you're coming in 20% lower, it's not going to be viewed in a positive light. It needs to be reasonable. Now, in a multiple offer situation, then a lot of that kind of goes to the wayside, and you really need to change your thinking in terms of, if I lose this offer, how much am I willing to pay? If I lose this offer by $2,500 and find out later, I'll be kicking myself. So crank that into your evaluation to determine what you're going to willing to pay. And in a lot of cases, it may be pretty close or above list price. The last couple of years we've had a lot of multiple offers, and people have been surprised that they lost an offer by a couple of $1,000s, and knowing it in hindsight, they said, if I had known that, I would have put more in. I was willing to put more in. So go through that exercise in your mind too, and consider that. And so those are just kind of the high points of things you can consider when putting your offer together. Now I want to go back to that timeline we talked about initially before it closed, and just summarize this. So you've got you put in your offer over here, and you've got a negotiation, and you get an accepted offer here. Now I mentioned the offer needs to be suitable or attractive enough for the seller to want to negotiate with you. Hopefully you will get to an accepted offer at that point. And you need to, when you find a home that you really like, if you're not ready to make an offer, if you don't have a pre-qual or a pre-approval, it could take a couple, 2-3 days. And a lot of these situations, when a house comes on the market, a lot of people go out and see it, and you end up in a multiple offer situation. The house could be under contract before you get all your paperwork done. So don't be that buyer that says, yeah, I've got time, I know, work with this mortgage loan officer, and I can get that thing done in whatever time, and I know what I'm comfortable with, and when I'm able to handle the sales price. But if the home sells out from under you before you can get that paperwork together, then you're going to keep looking back at that house, and you're going to say, I wish I had that ready. And you're going to keep going back, and I'm saying that you're going to go back, and every home you compare, you see from there on, you're going to go back to this one and say, if I only had been ready, I've got that done. The other important consideration too is, you waste a lot of time. You think you're qualified for a certain amount, and then, but what are you really comfortable with? And until you actually go through that process with the loan officer, then you could be looking for homes for $250,000. You're only qualified or comfortable for $200,000. So based on the interest rates, they've been changing lately. They're kind of settled out. But go through that process. The other thing is, when you put an offer together, you're looking at all these price, terms, and conditions, and you're coming up with how you're going to structure your offer. Don't do it in a vacuum. The excitement is around you when you're looking forward, and if I move into this house, and then keep the seller in mind too, because it takes two to tango. And remember, you want to put an offer together that's going to be attractive enough so that the seller will negotiate with you. There's nothing more disheartening to put an offer in and then have the seller come back and just say, offer's rejected. They don't have to give any reason. You speculate its price or whatnot, or it's a recall contingency. Sometimes they will give an indication, but they come back and reject your offer because it wasn't close enough. You don't have really a lot of feedback to go on. So hopefully this will give you a summary and an overview of putting an offer together in the hopes of getting it accepted, and what some of the key points are. If you have any questions or comments, or if you need help this season as we get ready to start the spring season in 2019, please give me a call. I'll be more than happy. I'm available to take buyers out and taking on new buyers, so hopefully we can link up. I wish you all the best. Thank you. Thank you for joining me for this episode of Central New York Real Estate Realities with Mike. If you enjoyed this episode, please give me a like and or share it with your friends. Let's stay connected. Hit the subscribe button so you'll be notified of future episodes as I release them. Look for me on these other social media sites as well. Remember, when it comes time for you, someone in your family, or a friend, neighbor, or coworker to sell or buy a home, call me for the personalized attention and professional service you deserve. Thank you. All the best. See you next time.